In this video, learn why entry price matters to make quality stock trades.
Hi, I'm Mike Bellafiore, co-founder of SMB Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. Click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community.
See how a junior trader creates an anti-playbook trade, in this case with a poor entry price, to help eliminate his bad trading and bad trades that are holding him back as a trader. Let's dive in.
Playbook on MRNA, which I've taken a lot of trades in and been able to see what works best with it and what doesn't work best with it. And so far I've had a few of these SSR short trades and they can work sometimes they can't, but you know, there's a couple characteristics I figured out about them, about my trading, the way I trade, that has made this trade pretty unprofitable for me and very uncertain. And that's kind of what I'm going to go through today.
So let me just set the scene. This is the third anti-playbook video that we've done. We've asked guys at our firm, starting with the newest guys, to share a trade that exhibits a setup that they should stop taking or bad trading. Also, as we're doing that, perhaps we'll get to the bottom of a few things that lead them to take a bad trade or do some of their bad trading. The idea is, on our desk, to grow and build from the trades that we trade best, put them into our playbook, and then this new exercise that we're doing, this anti-playbook exercise that we're doing to get rid of our lesser trading, the setups that just don't work for us. So just like we want to make more in our best setups and make more P&L, we can make more P&L by getting rid of the lesser trades, the bad setups, so that we keep more of what we make overall. So right up front, Garrett, I apologize for putting you on the hot seat and purposely asking you to share with us a trade that has not worked or trading that is you at your worst. But, and I tweeted about this week, we can learn from our losses. We need to learn from our losses. The biggest losses that we take from our losing trades is us not learning from them. And so let's do that. In this case, as a trader, sometimes what we learn overall is just to cut it out, just to cut the nonsense out, just to quit the suboptimal trading from our playbook, just to quit the nonsense, the lesser trades that don't work for us or perhaps for anyone. The bad entries, the bad technical setups, the over trading. Let's just get rid of that. So Garrett, why don't you get going here with the anti-playbook, one bad trade?
Yeah, no, and I agree. You know, I've definitely noticed in my trading that a lot of times I'll have my best days right after I have a trading day where I make a ton of mistakes, and it's just, you know, it's sobering, and it shows you, you know, it kind of gives you a slap on the back of the hand and, you know, tightens you back up. So I definitely agree with going through, you know, each of these trades, and it gives, you know, each of us presenting a better reflection on how we're trading. But yeah, so the big picture here, I'll start off with that. You know, obviously we've seen some historic moves in, you know, the S&P lately, or just the entire market, and in some subsectors. And, you know, we came down from the coronavirus and everything looks so, you know, so daunting at the lows. And a lot of times that's when we know we're at our lows. And since then we've rallied like, what is it, like 35% or something? The market has just been so resilient, you know, on any sort of, you know, sell off. And so with that in mind, you kind of start thinking, all right, there might be some days where there's, you know, it's a two-sided trade, but, you know, when the SPY picks its direction and gets out of ranges, you know, it's pretty good to trade for us day traders. So that's kind of sitting in the back of my mind as I make trades.
If you want to learn 3 real-world setups that our traders use including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So the intraday fundamentals at this time when I had taken the trade on Moderna, so they had been under pressure on a capital raise, and they were getting some data questions on, they released phase 1, I believe it was, data on our stock, or early stage, I guess you could say, showing positive action. And right now, like, the market sees anything with these vaccines, it's going to buy it up really hard. And then at the same time, it's kind of similar thing that happened with Gilead. You get the initial news, everyone buys it, and then a couple of days later they say, oh, well, it's not that great. There's some questions here and there, and then it comes right back down. And then on top of that, they were doing some equity offerings, and 75% of the time that's usually negative for the stock in the short term. Sometimes they can have some stronger offerings and they get bought up off of that stuff. But on this day, I believe it was trading around that $76 range, and a lot of times we can use that that offering price as kind of a level to trade off of. And that's kind of my idea behind this trade before I had taken it. But it's in the biotech industry, which has been stronger than the market, considering they're trying, a lot of the names are throwing out COVID, and that gets a pop. So, biotech's kind of outperformed the market a bit here on the bounce. The relative volume at the time of the trade was 12, ATR is 5, which is very good. Average daily volume was up, normal short interest, and then a pretty normal flow, and institutional ownership's probably flipping around every day. So I don't know how accurate that could be. It's from FinViz, but people own it. So I usually do a checklist for my playbooks that I love. And in this case, I did like an anti-checklist of, all the things that I didn't love about this trade. And I'll go through each of these, but, a lot of times the way I trade, things need to be out of range, even the pre-market range. And in this case, MRNA was holding on to some pre-market levels, was trading within an intra range if we're going from like 3 a.m. in the morning. So that wasn't great. SSR was on, and that's the biggest, attribute of this anti-playbook that I was doing. And kind of just to explain SSR for anybody that doesn't understand it. It's a rule that gets put on stocks when something goes down 10%, where you can't, if you're trying to short the stock, you can't hit the bid. And so the only way you can get into the stock if you're trying to short it is there has to be an uptick. And if, a lot of times you'll see a lot of people try and get short on something, and it kind of, a bunch of green prints will come in and it pushes the price up. And it just makes shorting lows on SSR stocks much more difficult. So there's a lot more factors that you have to throw in when you're thinking about doing this trade of, okay, does it have the extra juice to, anytime it gets an uptick, whoever's holding the stock long is still selling. Those are the people that are going to be pushing it down. It's the people who are holding it long that are selling. So you kind of have to flip your ideas with these types of trades, and they can just be so difficult. But other things that I didn't like about this trade, I'll show the 1-minute setup on it. It was pretty stretched out. It wasn't clean. You could say it's overextended, stuff like that. There was a good amount of energy already exhausted on the open, so it had sold off, and then we were kind of bouncing a little bit and then getting ready to push another low, but it really hadn't spent enough time consolidating again to make a really strong push lower. When you have a stock on SSR, you need strong pushes. And then finally, the gap fill had finished. So we'll go through each of those.
Hey, so I actually like that checklist a lot. Question for you. When you're in a trade, are you going through the reasons why this trade may not work out while you're in a position?
When I first came to SMB, I came on as an in-house trader, and I set up with Kenny. And big thing I learned from him was self-talk. And that's why I always do these checklists. Big style of his trading is he loves to do checklists and self-talk. And so he'll go through and be like, okay, I have this, I have this, I have this, I don't have this, I don't have this. And that's kind of how he goes about sizing and deciding when to take trades, when to take some off, when to add back on. So I do like to try and do that. And in this, I might have been clouded, I think, at this time. And I saw how far mRNA had come down. And when stocks have this huge of catalysts, it's really hard to tell, how much something will go. And I think that, conflicted my head of thinking, oh, this thing can go a lot more. I don't mind shorting, something that isn't that great. But then once you go back, you sober up from the adrenaline and you look back at the checklist, you're like, I didn't have these things. And so what I try to do every day is I try to do in my trade logs, I do check marks for, check marks against, and I try to do that every day so I can, build the muscle memory for that. When I'm in the moment, I can remember it a little bit better. But yeah, I do try to, go through these check marks in my head to, make trading decisions.
Yeah, that's a terrific best practice for anybody who's watching, which is you're in a position, you know the reasons why you think the trade should work for you. That's why you're in it. But you want to spend a good deal of time as well thinking to yourself, running through this self-talk that Garrett is talking about. Having this conversation in your head while you're in the middle of a trade. Okay, here are the reasons why I'm in the trade. Here are the reasons why this trade should work. But also, here are the reasons why this trade may not work. And when you do that, when you engage in that self-talk, it breeds an open-mindedness to your trade, to your position, to your trading, which is what we see, is a characteristic, is a mindset of what we see when elite traders are trading at their best.
A little bit of the chart action. So here's the daily, and then I'm taking this at the end of the day, but you can see what I meant by the gap fill was we had this consolidation, then we get that drug news here. And then since then we had been selling off. I think the doubt came in somewhere around here. And before this green candle happens, we sell into the gap fill. And that's what I meant by, I had taken this trade basically at this gap fill, which you might have, people who are looking bigger, longer term, having just some bids in there that get bought up, making it harder for you to short something. So that's a little bit of daily. And here's the 5-minute time frame. This is what I was going off of for my initial trade. I like to trade these inside candles. They measure like time fractals and ranges that give me some information on how far I think I can get in a trade, where my stop should be, stuff like that. And so I was shorting the low on this candle, which is 67.72. And I was looking for 2R, or a 2R for this trade. It was 1R because I was using the full bar. So this is a little bit different. But 1R would be 66.83. So I was trying to get it, under the 67, it was still in this pre-market range. There's a lot of stuff it's got to fight. I believe this hashed line is the open of the pre-market. So here's the 1 minute. So this is a few of the things I was talking about. I was trading in the range. It had come down a lot already on the open. It doesn't, this is a pretty stretched 1 minute. I think this is also what clouded me, is I saw it happen here. And so I was like, okay, maybe I could see a similar thing happen right here. But that was, I would say that's a little bit of FOMO. I was trying to get into the trade a little bit too late. And I shorted down at these lows, and you can see right away what I've noticed with SSR stocks. If it doesn't work, you almost have to take it like a momentum trade. If you're trying to short lows with an SSR stock and it comes down, you get triggered in, and it just won't go lower. Like usually SSR stocks will like vacuum if it's going to work. It just comes right down. And in this case, it doesn't. And when that happens, tons of people are trying to get short, and with the SSR, the only way they can get in is on those green prints, and it just, it has a circulating effect where, short after short just keeps pushing the stock higher. And I got stopped out this wick high, and it just went so quick. A lot of my trades I like to tighten up, see the price action a little bit more and maybe move the stop here, stuff like that. And I just couldn't even do that on this trade. And it just comes up and takes my full stop like right away. And I've noticed that so many times with these SSR stocks. It's really got to have like an extra catalyst, some extra volume, a really good 1 minute setup, be out of range, not in this pre-market range, stuff like that. And I just, I had way too many check marks against me, and I just took the loss for a pretty low probability trade. So here's my trade review. This is what I had in my trade book for check marks for, check marks against. I had the R vol. I had it under the day before's low, so it was out of the day before's range. But then again, I didn't have the SSR, not a great 1 minute setup, still pre-market low. I forgot to throw in the gap fill, but similar stuff I had from before.
You may be saying this in a different way, but from the open, how much has that gone down?
Well, just in points sake, it's gone down 2 points,
Yep. And it's gone down 2+ points from the open. And then how much time has gone by since the low?
Since this
of the open. Yep.
Since from how much time has gone by since the low that I took the trade?
No, the low from the open.
So from here?
Yep.
10 minutes.
Okay. So you've got what I would characterize as a bad price. Would you agree with that?
No, yeah, exactly.
Yeah, for us to take a trade like that, what was your trade? Were you swinging this? Were you momentum trading this? Were you scalping it?
I would throw it in, since it's trading off the 5 minute time frame. We're in the first 15 minutes open. This is most likely this is going to be a scalp for me.
Okay. And how much did you lose overall in that trade?
Looks like $1.50.
Okay. Well, that's not a scalp.
Yeah. So so I'm trading off of fractals, and I'm just trying to go off of what's going on in the action of that 5 minutes. And so if we have this strong of a move, I'm looking for a relative move. What's the other saying for that? Measured move. And so in this case, since we had come down 2 points, a 2 point move we had come down 2 points in 10 minutes, another 2 point move in about another 10 minutes. As far as scalp, I'm referring to the time frame. This should be a trade that only takes 5-10 minutes, maybe less.
Yep. So, but you're willing to lose $1.35 to make $2?
Yeah. So a lot of my trades are 1 hour trades that start out to be 1 hour trades, and then once I get in them, they create some different levels. I can ratchet up the R's on them a little bit, which is something I've been experimenting with lately. But yeah, I usually take 1 hour trades.
Yeah. So when I look at a chart like that, the time that it's steep to the downside. We talk about this a lot. It's gone down a couple of points pretty quickly. So there's going to be some risk that it can just pop up, $1 or $1.25, $1.50, and still find a way to actually trade low a day because of how steep the opening drive was. And you're going to need some time to go by to give you some protection to be able to take that trade. So that's something that I think these trades will work, but you're going to need to see a consolidation period that's longer than what you're seeing here on the chart, or you're going to have to be a lot tighter with your stop and truly make it a scalp. A scalp is a momentum scalp is, hey, I think this is going lower right now, and I'm going to take it. I'm going to short this right now, and it's going to go down right away. And if it starts to move against me, I'm going to get out of it, and I'll start over, perhaps at a lower price, but my scalp, my momentum scalp, is not working, because what a momentum scalp is I've seen that it's now ready to go down, and it should go down, and if it doesn't, then I'm going to get out, and I'm wrong on the momentum scalp. And I understand you're looking at markets a little bit differently, but for you to actually get this to make a little bit more sense, those are some things that you want to think about. And so, one of the things that I've noticed in studying when elite traders trade their best, and I've written a little bit about this, and I've shared this with you and the guys plenty of times, which is, you develop a thesis. Your thesis is, based on my study of markets, that this is going to have a lower leg next. Fine. Terrific. And then you want to see a setup that's within your playbook to take. And okay, you're describing one of them. And then you want to see it, and you want to see the price action confirm that your thesis is correct and the setup is being confirmed by price. And then you want to fight for price. You want to get in at a really good price. This strikes me as missing potentially a setup part. I'm not sure the setup is there, because I don't think it goes sideways enough. I don't think the consolidation period is a long enough period of time. That's something for you to really think about. And then your price, based on where you're taking your stop, is questionable. It's a tough price. You're not getting. I wouldn't suggest this is a good price to get in. And so, I'm seeing work on your pricing. I'm seeing, is your setup really there to be making some good trades? I don't know if you have any thoughts about that.
No, I totally agree. That's what I was trying to touch on that with the 1 minute, the stretched 1 minute. That's what I meant by that. It didn't not spend enough time to really have energy. That was it's exhausted too much energy at this point. It doesn't have the real energy to push through, the trigger that I was using, which looked like it was a little bit under 68. Doesn't have that energy to push through it and really take out the pre-market low. That would have needed to spend some time between 68 and like 68 or 67.50, it looks like, and then push, and then hit lows maybe.
Yeah, and if you're going to see, this is where your tape reading skills are essential. If you're going to take a trade like that, so far, so steep, so young, so far away from VWAP, with SSR, you can do that sometimes. You just got to sort of see it on the tape that the weakness is actually there, and the weakness on the tape is giving you protection. So maybe, went down 2 points, it popped up 20 cents, and you're noticing, recognizing, seeing that there is just sellers that have stepped to this 20 cents below the bottom level, and they're not lifting. Surprises you. You would think it should go up closer to VWAP, but it's not. And they're being stubborn. They're tipping their hands that they really need to get out of the stock right now. They're taking profits in this case. And now you have something that you can trade against for the type of trade that you're making, for the price where this is at, to make sense on the risk reward aspect. Because this doesn't have to do anything. This is one of the high flyers. It's in a sector that spikes up and down. It's in a sector that's gotten a bunch of shorts into it. It's a highly opinionated sector. This thing's run up from, the teens. I remember when we were actually not all remote, having a conversation with somebody who, I don't know if you remember that time it pulled in from the 30s into the 20s. That first time it had a big down move. I remember talking to one of the guys who has a business next to ours, who was just like literally imploring me to back the truck up and get long this name. I remember that. He was totally right. And lots of people have been really following this. But, this has gone up a ton. And so you've got, it's a high flyer. So you have a price issue here. And if you have a price issue, you got to be able to have protection that you're seeing from the tape to trade against, to make it make sense, to control your risk.
Yeah, exactly. I totally agree.
So I'm curious. So we're in agreement. Price is a little bit sketchy here. Is there something that causes you in your trading to jump into something like this at a bad price that you've recognized that's a pattern that develops with your trading?
Yeah, totally. I was actually just going to bring that up. A lot of times when I jump into these that look overextended or that just hasn't spent enough time to really create a trade setup, it's usually one of the most talked about names. When we were going through the stuff with the cruise lines and airlines, I made a few trades like this because you just think in your head, oh my goodness, these things make massive moves. This little bounce might be the last chance I get to really get in on this on a big move. And so, it becomes a FOMO thing. And other times it'll be, I don't see a whole lot of other things in the market. This is the closest thing to a setup I see. And sometimes I jump in it when I'm not, at my most disciplined trading. Usually I am a pretty disciplined trader. And this was definitely one of those times where I got stumped on this.
Yeah, that makes sense. All right, good. Good to recognize the trades that are your one bad trades, your anti-playbook trade, and then what precipitates you taking those trades so that you can put the protections in place, whether that's self-talk, whether that's having a trading buddy, whether that's rules, whatever it is, whether that's having Carlton come over, our floor manager come over and smack you upside the head, or take the keys away from your trading account for a little bit, or a walk, whatever it is. Good to recognize those patterns, because you'll catch yourself in time as you gain experience saying, oh, wait a second, this is an overcrowded stock. I've done this 3 times in the past. Every time I do this, I tell myself I'm going to stop doing it. I'm not going to do it this time. And to thwart that, I'm going to actually get up and go grab a drink. And Max and I are going to go get, what's that chicken you guys like to go get?
Oh, yeah, that Chick-fil-A.
Chick-fil-A. I'm going to go get Max, and we're all going to go get some Chick-fil-A. And I'm going to stay away from this trade. And as a consequence, I'm going to keep more of the P&L with my really good trades.
Yeah. I got to be able to drag Max from his desk before I can do that, though. That's a difficult task sometimes.
Well, maybe if you pay, you'll drag him off his desk.
Yeah, exactly.
All right, good. Let's finish this off.
Cool. Yeah. So that was the check marks, and then just lessons, similar stuff we talked about. If I'm going to take a trade like that, it's got to have higher R-vol. It's got to have some, really critical things that are moving the stock. Just a super weak tape, like you said. Critical level being broken, out of an intraday, daily range, time of day. Needs to show true weakness without it looking overextended. And, I like to do ratings in my head, like that check mark stuff I was talking about. And, with an SSR name, if I think this is kind of iffy, I don't know if this thing really has enough, then I need to just trash it. I call those 50-50 trades. But yeah, that was my anti-playbook.
Well, look, I apologize for making you do the anti-playbook trade, but actually I take that back, because learning from your losses is a great way for you to get better. Very few people do it. Most people bang and stream and cuss and blame everybody but themselves, and that's not a way to get better. There's lots we can learn from our lesser trading. And I will just say this, what is it, like 2 o'clock today? And my day is usually pretty packed. I've had 5 phone calls today with profitable traders, some of them star traders, who we talked about their lesser trades with, a majority of them needing to sort of get back on track with their trading. And, so this idea that you're not going to make bad trades and you're not going to get off track and you're not going to make lesser trades is not my experience running a proprietary trading firm. Proprietary traders, even the best ones, get off track, make losing trades. But what the best ones do is they learn from them. They take responsibility for their losses. They use it as an opportunity to grow. They use it as an opportunity to see the patterns that precipitate them trading badly, the patterns and the setups that don't work for them, and they work to eliminate them. And this doesn't ever stop. Markets are changing, and obviously we've talked about the historic March that our firm had. It was the best trading month that we've ever had as a firm. And then April, I think a lot of people expected for reality to strike, and we had an amazing month in April. And I certainly said to my wife, actually, in passing, because now that we're all in lockdown, we actually work in the same floor together. I was just having a conversation with her that, okay, now things are really going to get back to reality, and we can't possibly do as well as we did in March and in April. And so far in May, we're doing really well as well. But the reason why we're doing really well, and the reason why the best traders are doing really well, is because they're constantly doubling down on what leads to their best trading. They're constantly doubling down on reminding themselves things like self-talk that help them stay away from their anti-playbook, their one bad trades, and getting back quickly to what they do well. So very useful exercise. All the best guys are doing it. Appreciate you spending a little bit of time with us. Excellent review. And I promise we'll have you back for a monster trade.
Yeah. Awesome.
All right, thanks. Appreciate it.
Hey, go ahead and click our subscribe button so you don't miss any of the videos they're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at S&B, train and trade well.